Today's edition of Toggle's Daily Video Insights. For those of you joining us for the first time, welcome. My name is Jan. I'm one of the co-founders of Toggle, and we are going to take a deeper dive into one of the many insights produced by Toggle on a daily basis across thousands of US equities, highlighting what and how fundamental information in changes like earnings, analyst expectations, and so on might impact a particular stock. If you'd like to see more of these, subscribe to our YouTube channel, or you can also test drive Toggle Copilot yourselves on the toggle.global website. Now, the focus today is going to be on Donaldson, DCI, traded on the New York Stock Exchange. And as you can see here in the overview, there's actually been quite a number of different insights that the system has generated. A while back, it highlighted the first bullish insight, which highlighted that on a technical basis there could be some upside to the stock. Then there were recently some relatively minor 5-star indicators showing that potentially there's a period of consolidation. Most recently, we got yet another signal that there could be potentially some upside to this stock. Now, clicking on this insight card, we're going to take a look in a little bit more detail as to what this actually means. First of all, importantly, we know that there have been 20 similar occasions in the past with a similar condition, which here suggests that the technical analysis, in particular the consecutive days of move as well as the 14-day stochastic, have turned bullish for this particular stock. Now, consecutive days of price move, this one is a mouthful, but what it basically means is it tells you that the stock has had a few days where it was substantially closing higher on the day, and usually that suggests that there's quite a bit of thrust in this momentum. And so combined with a positive stochastic KD spread, it suggests that there is some upside pressure still left in this particular stock. Going back to the overview chart, looking at the expectation within a 6-month window, the rise could be as much as 5% plus. But importantly, looking at the confidence interval, you can see that many of these the confidence interval suggests that many of these past outcomes actually reach this level much sooner. So the way to think about the confidence interval, it really represents the range of past outcomes that give you a sense as to how wide the dispersion of those outcomes were. And immediately you can see that the 5% rise could happen much sooner than the 6-month window, and that it could reach much higher than the 67.18 that's suggested by the median target. One other important thing is, of course, to make sure that if the price were to deviate substantially away from this confidence interval and certainly dip below 62.12, this is the moment to reassess the thesis and potentially place your stop loss, because the important thing always is to also protect the downside and stay in the game. Now, the past performance here, also one thing worth looking at is you can see that most of the past outcomes were substantially positive, but there have been some that were negative. In particular, you see one here that was almost 20% negative. So again, really important to watch the pattern and see that it's still conforming to the past paradigm, and if it isn't, to cut the position or reassess the position very quickly. So much for Donaldson today. In the daily brief, which should be in your mailboxes already, otherwise subscribe to it at toggle.global. We also discuss just generally what the outlook is for interest rates and the recent volatility due to macro comments. Thanks for your attention. We'll see you again tomorrow.